What's good everyone? Welcome back to another video. This video will be a start of a new series that I thought of that might help potential new traders and also amateur traders. And I've not come up with a name yet, so do give me your suggestions under the comments below. This is going to be an educational series about trading and also some tips that I can give you guys to the best of my abilities. So to start off, I want to start with Fibonacci retracement tool. Okay, so if you're on TradingView, on the second icon, you click on the arrow signs, you can definitely see over here many different kinds of tools you can use, but today we'll be concentrating on Fib retracement. So what is Fib retracement? Okay, let me just show you an example. So basically, Fib retracement helps you to identify potential support levels or potential areas that price will pull back into, and it also gives you potential target areas. So let me talk about the support areas first. Okay, zooming a little bit in. Over here, you can see many different colored layers, right? So these are the retracement levels of the Fibonacci. We have the 0.382, 0.5, 0.618, and the 0.786. Okay, so what does all these levels means? Basically, they are just mathematical numbers that are very important in trading. I do not know what's the reason for this literal exact numbers, but it really helps a lot in your trading. So that's why I use it. Simply put, usually we identify what's the trend first. So for this example, I'll use the ETH chart. You can see it's trending very nicely to the upside. Just do an example over here. Price forms the support over here, pushes up. We identify that this is a trend to the upside. All right, so normally if we do not have any positions here, we would try to FOMO in, right, and enter over here or something like that. Well, we shouldn't do that because anytime it can have a huge pullback and you'll be in significant drawdown, and that's not what we want. We do not want to enter a position at a high. We want to enter a position at a support or at a low. So what do you do over here? We simply use a Fibonacci. Click over here. Let's say we haven't found a position, right? We found a potential top. We mark it from the bottom to the top. As simple as that. We just need 2 points. So I have chosen the wick low because it varies from trader to trader, but I like to use the end of the wicks, and so that's what I will do. I pick the low, I pick the high, bam, that's it. The Fibonacci numbers will automatically come out. So you can see price pulls back, starts to pull back, and taps the 0.5 and close to the 0.618 levels, and then we push up. Okay, so there are 4 different numbers, right? To me personally, in my trading, I find the 0.5 and the 0.618 level the most useful, and price typically, let's say out of 10 times, it would retrace maybe 8 out of 10 times to these 2 levels. So these 2 levels are very key. The other 2 is just for reference. Okay, so just moving it back. Okay, let's say, let me just do this. Okay, remember this is just a weekly chart. Okay, price pushes up, right? Now, we do not want to enter yet because it's already too high up. We do not want to enter over here. Let's let it play out. Okay, it starts to pull back. So now we're thinking that, okay, it might have reached a potential resistance, and over here you can see resistance, potential that is going to pull back starting from now. So we pull our Fibonacci from low, range low to range high. Let it play out again. We're waiting for potential support to buy in. We wait a little bit more. Okay, we have tapped the 0.5, 0.618, but we do not want to buy in right now. Okay, we let price do its thing first a little bit more, let it play out. Okay, so since this is the weekly chart, I usually zoom in either to the daily or the 4-hour to enter, right? So I'll move on to daily just for example's sake. You can see price put back all the way to the 0.5 retracement level, and then we start to bounce from there. Okay, so before that, I want to emphasize this: Fibonacci levels are not key levels. I repeat, the Fibonacci retracement levels are not key levels, and so do not think that price will tap the 0.5 level nicely and then bounce off there. You can see price will be a little bit below or a little bit above the particular retracement level. So Fibonacci retracement tool is basically just a guide and also to add confluence to your analysis. The first thing you need to add, or the first thing to me, is price action always. So I'll pair price action with Fibonacci coming in second. So simply put, I'll just identify a support if I want to trade. I always do that first. I identify key levels first, then I'll use the Fibonacci. So you can see we have formed a potential support. We are holding above. We did not close any candles below this support level, support line. Plus, it pairs up with the Fibonacci retracement because it's bouncing off the 0.5 retracement level. And then we start to push off. So I would have entered a long over here. Okay, maybe stop loss over here. And talking about targets, shifting up, you can see we have two levels, another two levels, right? Again, these two levels are automatic. Once you have picked 2 points, it will automatically come out. We have the negative 0.27 extension and the negative 0.618. So again, don't ask me what are these numbers. I'm not sure. It's just the tool itself and helps you to identify potential take profit areas, which works wonders. Okay, so usually I will have two take profit zones. Usually these are just guidelines. Of course, my take profits will be paired with price action plus candle resistance and candle support levels. So these are just guides, but you can see it works wonders. Let me just play this out. Price slowly pushes up. We're aiming for this negative 0.27 extension. Okay, and bam, we have tapped the negative 0.27 levels. And if price manages to hit this part, I would have taken, let's say, 50% of my position out. Or if I'm comfortable and I'm happy enough, I will close my whole position. If you're confident in a trade, you might even want to hold it to the negative 0.618 level. But I always take some profits over here first. And let me play it out more. You can see it never touches the negative 0.618. So always take profits first, at least a little bit over here, regardless of how bullish you are. And you can see price slowly just pushes down without even tapping the 0.618. So that's about it. That is a Fibonacci retracement tool. It helps very well. And in summary, it is supposed to be used as a guide only. These support levels are not key support levels, and you should not just buy based on price tapping that area. You have to pair it with price action or whatever, however, what kind of trader you are. For me, it's price action first. Coming in second will be Fibonacci retracement levels to add confluence to your trades. Similarly, to the short side, just a very quick example. Similarly, you want to put at a point high and a point low to identify potential support. So basically, everything is reverse. You can see price form a high, a low, and then let's say we are looking for a short, right? Because we identified that the trend is to the downside. So now we are looking at potential resistance areas, or whatever you want to call it, a potential retracement area. We look at the retracement area, put up our Fibonacci tool, and what do you see? Price literally hit the 0.5 zone again, almost to the dot. But remember, these are not key levels, it's just guidelines. We use price action first to identify key levels. Let's say this is a key level, price push here. Okay, now we are seeing that, oh, price is tapping this key level and holding as resistance. Plus, it has retraced 0.5 level. And now we might want to enter a short over here, stop loss over here. And then where are we targeting? Again, first is key support area. So I would have targeted this level, which is around the 1725 areas. We hit it. Plus, we went ahead to hit the negative 0.27 level again. Very nice trade indeed. So, and remember I said the negative 0.618 is your TP2, and you see price usually does not hit it, but it is trending very strongly. It sometimes could have hit this level. But anyway, always take profits at this area first. Okay, so hope this helped you to understand better this Fibonacci tool, and you can use it in your trading as well. So yeah, hope this video finds you well.